5, 4, 3, 2, 1. Welcome to Loup TV. I'm your host, Gene Munster, along with Loup's David Stockman. Our topic today is related to real estate tech, something that has had its fair share of blows from an investment perspective over the last 3 months. But more specifically, we wanted to give some insight in terms of how we're seeing the current trajectory of Opendoor's business trending. Opendoor is an investment at Loup. And I want to bring on David. You're the one who's doing all the hard work here. Appreciate that. And maybe just for some context, it has been a free fall with these real estate tech companies. Zillow down 30% over the last 3 months. Opendoor, this is from the beginning of the September quarter, from October 1st. Opendoor down similarly, 28%. Redfin has fared the best of them, down a mere 20%. These numbers are still painful to recite. And ultimately, the question for us is less about what's happened over the last 3 months, more about what's going to happen over the next 1 to 10 years. And we still have a belief that iBuying is something that is going to gain share. Remind me, David, percentage of homes sold in the U.S. that were done through iBuying?
It's fluctuating between 1% and 2%. I think with Zillow gone, it'll probably be about 1% right now.
It's nascent, to say the least. Reminds me of EV kind of market share and where that's going. Big debate whether or not consumers actually want to transact with this, with iBuying. We think it does take some of the friction out of the process, and there is a spot in the market. Maybe it's 10% of homes, 20, 30%, 5%. It feels like it's going to be bigger than 1 or 2%. But that said, here we are, and we get a chance to look closer at some of David's work. And we don't want to give too much detail in terms of the process around this, but do want to lead with the substances that we have a way that David manages to triangulate the trajectory of Opendoor's iBuying business. This is not investment advice. It just is simply us sharing some of the work that we're doing. Again, we are an investor in Opendoor and sharing kind of the current trajectory in our view of how the quarter is and maybe what the outlook is going to be. So David, maybe give us a setup for how we should think about Opendoor's December quarter, what the key metric is, and where investors got that key metric.
So if we look at December, the top line that Opendoor reports is their revenue number, which is a function of the number of homes they sell at, the average selling price. And obviously the homes that they sell are homes that they had purchased in the previous quarter. And so you can think about it in the sense that purchases are a leading indicator of sales to come in the next quarter, maybe the next 2 quarters.
And remind me, does Opendoor report its purchase activity?
They do, yep.
So the number that they gave when they reported the September quarter was a read on, because that lag effect you talk about was a read on the December quarter results, correct?
Correct. So right now, if you look at what consensus is estimating for the December quarter, it's about $3.1 billion in revenue. And if you back into an average selling price based on their historical trends and knowing that the market continues to appreciate the home values, it's looking like the street's expecting around 8,200 homes sold in the December quarter. And based on our work tracking, again, to your point, this isn't the most precise tool, but it gives us a high level view of how the quarter is trending. And based on what we see there, it looks good that Opendoor should be in line with that 8,200 homes. Again, it could be, +5, -5% above or below that, but it seems like it's trending in the right direction.
And you mentioned before that most of that trend, that read, comes from what the September reported numbers were. And so in the case when will they typically come in line with whatever that number is, or can there be some upside? Can it trend a little bit faster at times? How did it look? How did September, for example, look relative to expectations?
So the September quarter, they surpassed expectations by about 13% on the revenue number. And then they guided up the December quarter by just under 10%.
Okay.
So
Good.
when you think about what they have to do, the way I like to think about it is that they end every quarter with a certain number of homes in inventory. And I'm checking my numbers. So they ended the September quarter with something like 17,000 homes in inventory.
Got
And
it.
the December quarter is looking for about 8,200 homes that they sell. So that's roughly 50% turnover of those homes. Historically, that number has been anywhere from 75 to over 100% of the homes that they had in inventory that they sell through in the quarter. Again, that's off smaller numbers in the past. So we have to remember that as Opendoor scales and gets bigger, it's harder for them, of course, to turn over as many homes. That said,
let me interrupt. That sounds like that 8,500 number for December, that sounds maybe on the conservative end, because we're assuming a 50% turnover versus before it was 75% plus.
right. And it'll be a step up, obviously, in the number of homes sold from, it was about 6,000 last quarter to
Got it.
8,200.
So you want to be, prudence would be justified here. It makes a ton of sense, but I can see a path, and not don't want to take this to the bank, far from that, but I could see a path where you have some upside for the December quarter based on that turnover number. There's some fluidity to that number, correct?
Correct. And we're, almost done with the December quarter now. We just have 10 days or so left. And so what we see from our tracking activity, it doesn't, I want to think that they vastly exceed that number, but of course there can be room for
upside.
That,
but if you're looking at this, the perspective, this is a momentum game. Despite the 30% drawdown in the share price over the last 3 months, this idea that these tech companies need to beat numbers. Last quarter, it was called a 10 to 15% top line beat. It sounds like in line to, there is room for that kind of a similar type of outcome in December as was September. Would that be accurate?
Yeah, that's accurate. And I think if you look towards March as well, then
maybe just let's maybe put a period there. Done talking about the December quarter, shifting to March. And this is where your process comes in particularly helpful, because of that lag effect. All the data that you're gathering here is going to give us at least a read on March, correct?
Correct. Yep.
What their guidance would be for March. And so, yes, what is it? Do tell, what is it suggesting for March?
So again, I like to ground it in the inventory number and just thinking about how fast they can sell through that inventory. The company did comment that their purchase activity in December was going to moderate as they take into account seasonal factors. We know that in the cold weather, fewer people transact homes. So they purchased around 15,000 homes in September. I think my guess would be somewhere around the 12 to 13, 14,000 range they'll purchase in December.
Okay. So a step down, but related to seasonality.
Yeah, I think they're being prudent and cautious as they go into the slower seasonal months. They don't want to have too much inventory sitting on their books. So what I see is that at the end of December, I would assume that there's going to be something like 20,000 homes in inventory. And again, for March, the street is looking for something like 8,600 homes. So 5 to 6% above the December quarter. But again, it would be about 40 to 45% turnover of their inventory at the end of December. So again, I think depending how fast they sell through that, there's plenty of room where they could exceed that.
Got it. So if we think about the September quarter, it was called a 13% beat and a 10% guide up. Your early read here would be in line to a 15% beat for December and guidance for March in line with the street to maybe 10, 15% up. Sounds like it has a similar kind of look and feel as the previous quarter.
Yeah. And I don't want to get too, put down too accurate or precise of a projection, because I do think we just have to see how Opendoor thinks about reselling their inventory. Right. Exactly. The bottom line is that I think about it, they control their fate in terms of hitting those short-term targets.
The gotcha.
For me is just that that we see from a high level them continuing to expand into new markets, continue to accelerate their purchase and sales activity, because ultimately this isn't about whether they beat one quarter or not, but we're really focused on, does this long-term 10-year secular trend, are we seeing?
Place.
Exactly.
Yeah, that's a good, let's take ourselves out of the game of trying to guess what the turnover rate is. And there's a lot of variability to the end number on that, and look at the big picture. Is that it seems that this iBuying theme is working, and makes a ton of sense. Can you remind me, I guess, pop quiz, how many markets is Opendoor in today?
They're in, I think, 42.
42 markets. So I'm here in Minneapolis. Opendoor won't work for me, and like I pull open the app, and what does it say? We're not available in Minneapolis.
Yeah.
Correct. And so 42 markets, and then the pace. Best guess how many they'll add in 2022? How many new markets?
My guess is something around 20 to 25. They started 2021 with 21 markets, I think, and doubled to 42. Maybe it's 44 now. So I could see them easily doing another 25 in 2022, which would get them to roughly that 70 markets.
Yeah, that's going to help the trajectory. I would guess that these markets that they're adding now probably are smaller markets than the initial ones, but still, when you think about kind of how this can layer together for the next year, assuming that we're right on this theme of iBuying, you start adding different cities, you can see how 2022 can be in a good position for Opendoor. Very clear. Appreciate that, David. Before I wrap, any final thoughts?
I would think about the next 2 years for Opendoor. I think of them trying to get to that 100 markets mark. So I think by 2023, that's what would like to see, is them get into 100 markets, because as you see, if you look at housing across the US, the top 100 markets account for, I think it's something like 80 to 85% of all home sales. And if you look back at Opendoor's investor presentation in 2020, they kind of laid out this roadmap for 100 markets. And so I think that's their next kind of interim goal of what they want to get to. And they've
Do you know how much of the market they're seeing now with those 42 markets?
42 markets. My guess is it's something like 35 to 40%.
Okay. Might be even a little bit more, because they probably are in some bigger markets initially. So maybe it's 40 or 45. But it's far below. Oh, I see what you're saying. 35 to 40% of the overall, the whole market. I see what you're saying. Yep. That would make sense. Totally makes sense. I interrupted. Any other final thoughts?
No, I think that's good. I think that's where we should wrap it up.
Well, we're enlightened from that. Reminder, not investment advice, just kind of how we at Loup are seeing the world. On behalf of David, who's doing all the hard work, and myself, Gene, and Loup TV, bye for now.